Wednesday, February 1st, 2023, market analysis, Stan Ehrlich. Here we go. We have the Fed coming out with an announcement in approximately an hour, a little bit over an hour. 11 o'clock California time. It's currently 9:52 California time. We start out with the S&P 500 again today. In the last week and a half, we have broken the 200-day moving average. That's the investor long-term Dow theorist moving average on the upside, which is bullish. Secondly, we have broken the long-term bear trend line starting from January 4th of 2022, the beginning of the bear market. That has been overcome, and we are now well above it. And a head and shoulder bottom starting in June with the first shoulder, the low on October 13th, and the last low, December 22nd, has its neckline broken. And we are now for the second, third, basically 3.5 days above the neckline, but not by much. We are currently at 404 and a small number. The neckline is a little bit below 402. I'm going to call it 401.75. That should be very, very close. Don't want a close below 401.75. Do not want to close below anything lower than that, in particular, the low a couple of days ago, which was a price of 400.28. So anything in the 390s or lower, of course, could be very bad. I might need a day or two to verify that it's a head and shoulder bottom failure, and that would lead to a pretty big decline, I would expect. On the other hand, if we close above yesterday's high, which was an excellent rally in the close, 406.53, that would be very friendly. It would be another new high closing price for this rally starting on December 21 or December 22. And we may even close above 410.48, which is the high that's extremely important. And that was on December 13th. That would make a new high since early September, many months, several months, and perpetuate the long-term bullish technicals. If this head and shoulder bottom is going to work correctly, those are the rules. And the minimum, if it works correctly, upside objective is going to be challenging all-time historic highs. Very, very close to the high on January 4th of 2022. Now, if you have any questions, you can email me at info@ersignals.com. There it is right there, big letters. So that's my opinion on the S&P. We are at a juncture, not far enough away from it. I'm hopefully bullishly, to be comfortable about any significant downside retracement. We can't afford that at this point because we're too close to a tipping point, one way or the other. So far, the tipping point has definitely been on the bullish side. A couple of more minor barriers to overcome, but I like what I see in general. We are down a little, 2.25, not that big a deal. And certainly with the Fed announcement coming, you'd expect some significant volatility. Usually you get it, and I'm hoping it's going to be on the upside. The DIA is a different story lately, and I'm going to go to that daily vertical bar chart right now. Big sideways trading range here, essentially since November. A pennant formation, if you will. But the pennant formation at the back of it contains the low early December, or rather later December. And that is the last shoulder low on a head and shoulder bottom, which has a neckline that slants upward and is now a little bit above 350. And here we are, 337. So it's got quite a ways to go before it breaks out of this head and shoulder bottom to the upside. Obviously, like the spider, it can't start breaking into new low ground for any amount of time because it will start ruining the pattern. You've got some rules here. You got price level rules and you've got time frame rules, both. All of them look very good, not perfect, but very good for both the S&P in particular and the DIA. I don't see anything wrong. All the body parts are there and they're in the right place, basically. So head and shoulder bottom, guys. Let's see it go, 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 go. The QQQ is a little higher than where it opened, holding up much better. And already for several days now, above its long-term bear trend line. That's been broken successfully, tested successfully, made a new high afterwards successfully, and we're not far from a high again. It is well above the neckline on its head and shoulder bottom, even though the shoulder in late December is a little lower than one would expect. It is not out of the question at all. It's still looking to me, and I've seen probably thousands of these over the 52 years I've been in this damn business, occur. Head and shoulder patterns are my favorite technical analysis formation. They can occur in very short time periods, like 5, 10, 15 minutes, an hour, 2 hours, couple days. I saw one, I believe it was the dollar index. It took 10 years to form, and it worked, just obviously very slowly. So I like this pattern. It's got some rhythms involved, horizontal price levels, supports, resistance, trend lines, which are called neck lines in this particular case, timing, I said, cycles. So a lot to it and pretty specific rules, none of which have been violated here to any extent that pattern would fail. This is in progress already. I could support the idea that you're going to have a dip down to 283, but that's about it. In that case, you're going to see DIA come down to the bottom of its pennant, and you're going to see the spider fail to stay above its neckline. But we'll have to see what happens, and it's going to take us 1 hour and 1 minute. That's my commentary. I'm very bullish, but it's based on the head and shoulder continuing to perform properly. So given knowledge about this pattern, you know where to put stops, how much risk is involved, where to get in trades and out of trades, and so on. Let's go to the QQQ, and it is what I just talked about, I'm sorry, doing very, very well. Now, futures. I'm going to concentrate on those futures markets that have something significant to say. I had thought we were going to form a head and shoulder top in the orange juice contracts, but 2 days ago, the market started to pop up. Yesterday, it pretty much ruined the pattern, and today it's totally gone. We're well in the new high ground. Probably a weather freeze problem in Florida, making orange juice more valuable, hurting the crop. I learned a long time ago that if you actually get slightly below freezing for less than, I think it's less than 2 or 3 hours, and then things warm up, it improves the flavor of the orange juice with a little tiny bit of frost. I'm not sure. I'm not growing orange juice trees and orange juice, but I believe I learned that a long time ago. I hope it's correct information. Next chart. So that head and shoulder is dead. E-mini, same commentary as the S&P, except here, there was one particular day back on December 13th where the rally high overnight was much stronger than the spider, which does not trade overnight, aftermarket. And therefore, the neckline was just barely touched a couple days ago. And we are still below it, so we haven't got the breakout, and we could see a little bit of a dip without damaging the formation. And I'm saying a little bit of a dip down to 39.45, something in that ballpark, and then turn up and be a good formation. We'll have to see about this Fed stuff. I think they're expecting a 0.25% rate raise. Next, soybeans had a nice bearish engulfing ER automated sell signal a couple of weeks ago. It worked very well for a few days, and that's exactly what the system is built for, picking tops and bottoms to the exact day they happen. It also is able to pick tops and bottoms within a few days of the actual highest high or lowest low. But the idea is to pick it on the exact same day that the turn occurs, which we did a couple of weeks ago. Now, the rally high yesterday did not get high enough to stop us out on a longer term trade. And we are down sharply this morning, giving us hope that we're going to see new lows below 1478 soon. This is Wednesday. It could easily happen before the end of the week, or let's say next week at the latest. So I'm bearish, looking for a move down, probably, I'm going to say 1410. Next, bullish engulfing a few days ago, worked only for about a day, day and a half, and now it's failed and we're stopped out. If you were in a longer term trade, if you were in a scalp trade or a very short term swing trade, there's a very good chance you made some money on this signal. But now we're below the low of a bullish signal, and on a longer term basis, that means it's gone, it's not working, done. That was live hogs. Next, new short sale on the top of the market on the red gold sell signal. Again, I always mention these signals the day they happen. So far, so good. We're down little this morning. I want to see a new low for the move down like we had yesterday, but that's the name of the game. The trend needs to continue down, lower highs and lower lows. I'm looking for lower levels, probably down to 1854-ish. Next. Head and shoulder top is still alive and well, has not broken out yet on cocoa. Slightly downward slanted neckline, looking for lower levels. We had a sell signal on the first shoulder high, nothing on the head per se, or the last shoulder for that matter. So pattern says south, and the price action is cooperating in the last couple of days satisfactorily. You know, we're close to the new low close for probably a month here. Oh, it's actually going to be way over a month. Yeah. If we can just get below today's lows on a closing basis, that is going to happen. That should start a fast break. Next, this is heating oil. We have a sell signal smack dab on top. And again, that is why I built this automated trading system, which can be run in a manual mode. So you make a decision as to whether you want to get in the trade and how, et cetera, et cetera. We have two sell signals, both of which have been working great. This is a new low and likely a new low close for the move down since we picked the top. Next. Also another great sell signal. It's only been 3 days now, but guess what? Today's a new low and we're on the low of the day. So this is making some money as well on crude oil. And it could be powerfully bearish because we don't have too far to go to make a new low since a year ago. Long-term bear market. And I just got to point out, we picked the high on a broad double top way back on June 14th, and it's been basically a bear market since. And there were 3 sell signals on top. The middle one was the highest high. Next, we have a buy signal yesterday in platinum. It looks very good. I don't think we hit the stop. We came very close to it, so we're still long, but it's a loss, but we're not out, so we still have some hope. It's still in support. All the other rules apply, so I'm bullish, but it doesn't appear, and looks are deceiving, especially when you're trying to pick top and bottoms in markets. It looks bullish at tops, of course, and it always looks bearish at the bottom, of course. So it's counterintuitive. You have to know what you're doing to actually if you're doing it psychologically, mentally, discretionarily, on your own, be able to force yourself to sell when the market's going straight up, for example, or go long when the market's going straight down. But that's what the system is built to do, and it doesn't have any emotions. And you'll be looking at a lot of buy and sell. That sell is red and buy is green, signals that are the high of important major swings or the low of major important swings. So this could still be a good signal. I don't know. We'll have to see. Next, sugar, straight through the roof. No head and shoulder. I thought there was going to be several days ago, but now very overbought and almost up to 90. And I talked about this yesterday. When you get up to very, very high levels on my custom relative strength index, which is the chart on the subgraph, this is RSI. I learned it from Wells Wilder himself. It's my version of it. So I plot it differently, 3 different numbers involved, and there's other variety of changes that I've made. So once you get up this high, you almost always turn back down, and here we have it today. Next, coffee. I'm going to make the same damn comment exactly. It just shot through the roof, got way overbought yesterday, again close to 90, and we're down pretty good today. Next, I'm just looking for a turning point here. If perchance you were able to get below yesterday's lows, and we're not that close, then you would have a red bearish ER, that's early reversal signal, and an official sell signal. We had one like that way back here, December 7th, 21. That's a long time ago. And I don't see any great sell signals on this particular chart since. We had a very, very good buy signal November 21. That's about it for coffee. Now, the wheat futures, neutral to bearish, and I'm going to be going faster here because I got not much to say about these others. High-grade copper, correction, back to support, 3.9 something, then up more after that. Next, 2 oversold, very dangerous to be going short down here. I realize it's continually making new lows for a whole damn month here, which is very unusual. Doesn't seem to want to turn up, but it will any moment. I expect it to happen very, very soon, but I probably said that a few weeks ago and it didn't. So I'm a little confused. Well, I'm not confused. It's just not doing what I expected. And that's natural gas. Next. Oh, by the way, natural gas, we got the top of the market to the exact day, of course, back on August 23rd, way up at 10.55, and that's now 2.5. That is a bear move. Next. Neutral to bullish, maybe a little bit more downside correction. Next. And what was that? I'm sorry. Live cattle. Next. Soybean oil, gigantic pennant formation, neutral, looks a little bit bearish here, but basically neutral. I'm waiting for a signal. Same commentary for corn, neutral, waiting for a signal. Next. Long-term trend is definitely down. We've had a very good rally in the last couple of months, and it came back up into resistance pretty nicely, pretty accurately. I think it's about to turn down shortly. I haven't got any signals at the moment, so I'm not doing anything. I'm waiting for some signals, but I think the likelihood is it's going to turn down. Next. Exactly the same comment here for 10-year notes. And that, of course, I'm sorry, was bonds. And I'm slightly negative, as I said, but in interest rate futures, I am expecting a long-term bottom to be built. And remember, in a little over 45 minutes, we've got the Fed making some commentary. Next, silver, neutral. Yep, pretty damn neutral. That's all I can say. I thought we had a top formation. It's ruined in orange juice, and we started here. I talked about the freeze. Probably it's gotten awful cold down there, and the bricks and so on. BRIX. Well, now let's go to forex, and I'm going to be sliding through these pretty quickly. Sell signal came close to getting stopped out today, very close. I'm looking for it to turn down, but I got to see it happen immediately. Next, same kind of commentary for dollar index, not quite as close to a couple of buy signals failing, but it's got to turn up real quick, and that will probably be in about 45 minutes. Next, dollar to the yen, long-term trend down, and that has since bearish engulfing sell signal on the top of the market. Fantastic signal. We recently had a buy signal that is working slowly, but you couldn't prove it by today because we're down pretty good, and this looks like a new low close for about a week and a half, but not a complete failure from the signal standpoint. So we'll have to wait to see how this pans out. I need a 131 plus close and not below 127. That would kill it completely. Next, bullish, friendly, period. Next, dollar to the Canadian, neutral. Next, dollar to the Swiss franc, neutral to slightly bearish. The previous buy signal worked for a couple of days, and now it's no good anymore. But the trend is down, and you will see buy signals periodically in a bear trend that don't necessarily work very well. They may work okay. They may produce a rally, but it may not change the trend. And then some of them sure as hell change the trend. It's a few great buy signals on this chart, and only one great sell signal, and a couple that didn't work very well. Remember, we always have a protective stop, commonly called a stop loss, in the trade immediately upon making the trade. The strategy calculates your risk in advance. You don't like that amount of risk, change something. The inputs or variables in the strategy are changeable to your personal preference. Next, and it's called the ER signals. And I have to hit enter here. There we go. Last one, ER to the pound, euro to the pound, neutral to friendly, coming up pretty good. Not overbought yet, looking for more rally. And the sector charts had a bullish engulfing, didn't work quite right, but the market has been coming up, so I can't really take credit for that buy signal. But hey, it gave you an idea that the market was going to move up some more. Problem here is you're up against some resistance, and the last couple of months the trend is down. So this is kind of iffy on a longer term basis. I guess I can afford to see a little bit more strength, but not too much short term. Next, in this sector symbol group, IYE, we got overbought. We're retracing down into support. I look for a little bit lower levels for the next few days. Next, gapped up. Gaps are almost always closed. So I'm looking for a retracement to close this gap very soon, but the trend is up, new highs for months. It's broken what appears to be a neckline, and it's acting textbook example of how a head and shoulder bottom should break out, test the neckline, and make new highs afterwards. Bullish. In fact, very bullish, probably up to 290 or something. Next, almost identical commentary on XLK, but we dribbled down slightly below the neckline like the S&P did a couple of days ago, and it's doing all right. We need to see a new high and a new high quickly for the trend, and it can't collapse or the pattern is going to be killed. Next, broken long-term bear trend line, tested the trend line, making new highs for the move, breaking resistance, got a little overbought, but looks like it's going to work its way higher. I would expect to see something about where my cursor happens to be, 150, 155, something in that area, maybe 160, but a decent rally looks likely still. Next, we've got XLF, pretty much the same commentary. It just has to get completely through that resistance. It tried to do it yesterday and is pulling back a little today. So bullish, needs a decisive bullish breakout and then it should be on its way big time. Next. Pretty much the same commentary. Next. QXOP, and that's the oil and gas. Down hard, got overbought, coming back to a little support. Trend is pretty iffy here, kind of neutral. Next, GDX, and this, of course, G, gold mining. Bull trend. We've had a little correction. Neutral RSI. I think it's going to turn back up and make new highs for the trend very soon. Next. OIH. I'm sorry. Yeah, OIH is in a bull trend. We got a sell signal that's still good. Might have more of a downside correction. There is a little gap to fill down here at around 298.90. May drop off to that level, turn around and head north. We've got a lot of support, not too far below the market here. I'm bullish, but it looks like there's a little more correction going to happen. Next, XLB made a new high for a long period of time yesterday, but not holding at the moment. Dipping back into yesterday's range. That can happen for a day or two, as long as we see a new high with a new high close above previous highs very soon, which I think is going to happen. There's something else going on, which I don't see. I still am bullish here, looking for higher levels, probably up to 90. Next, XLV. Neutral. Next, XLE. Little bit of a double top, major historical resistance, did get overbought and is on its way down. I don't think it's going to turn into a bear move. I kind of expect it to bottom out very soon, maybe around 85, 86. Next, and it's all 87.5 right now. Doesn't have far to go. XLU. No comment. Next, XTL. Neutral. Not much to say at the moment. Next, ITB. Bull trend. New highs for months, many months. Sell signal did not work. Oh, well, it did for a day or two, but it did not work longer term. Getting close to overbought, so be careful about getting long here, chasing the market up. I would wait for a little bit of a correction, which might very well be around where my cursor is, 65.25, but I'm thinking it's probably too low. 67.75 looks a little bit more likely in the next few days. That could be a good buy there. Next, KBE. Broke a bear trend line. That is not a neckline. It is the top of a downward sideways pennant formation. So that's very bullish long term. Follow through today. Good. Almost getting overbought, so there could be a little squeak more of a rally here up to maybe 50. The balance of today, tomorrow, that kind of thing. Bullish. Looking for test of resistance overhead. Next. Same kind of comment, except it's cleared its recent resistance and has some elbow room to the upside. I don't see any reason why it would turn down. Looking for minor to intermediate new highs here very soon. Next, XHB. Got overbought yesterday on a very sharp rally. Pulling back very slightly, no big deal. Looking for higher levels. Next, XRT, second to last this morning. Bullish, overbought, looking for a minor downside correction. Very probably or possibly back to 67.75 and then up. This looks pretty good. It could have built a major long-term bottom. What sector is this? Retail. Yeah, okay. All right. And the last one is XME. I have to say the same kind of comments in this metals and mining sector. XME. We look like we're going to make new highs again in the next few days. I got no reason to believe that we're going to drop off any significant amount. And I'm going to leave you with that. We've got a little over half an hour, 37 minutes, I think, until the Fed opens its mouth and does something to the market, probably. Have a great trading day. Always use protective stop loss orders when you make a trade. Never get into the trade without thinking about your risk factor. That's what kills so many investors or traders, et cetera, et cetera. Take care.